soul.
Have you ever looked at your silver portfolio and felt that sinking feeling in your stomach because your investment is down 50% or even more? If that sounds familiar, then what I am about to share could completely change the way you see silver from this day forward, because history has shown us something that almost every successful investor eventually learns. The biggest gains rarely begin when everyone feels confident. They begin when fear is at its highest and when most people have already given up. Today, we are going to uncover why silver has survived every financial crisis, every recession, and every market panic for hundreds of years, and why many analysts believe the next chapter could surprise almost everyone. So before you make your next decision with your silver, stay with me until the end, because what you hear today could save you from making the biggest investing mistake of your life. If your silver investment is sitting deep in the red, the first thing I want you to know is that you are not alone. Thousands of investors around the world have experienced painful drawdowns in silver over the years. This market has always been one of the most volatile assets available. Price swings of 20%, 30%, or even 50% have happened many times throughout history. That volatility can feel brutal, especially when every headline tells you that silver is finished. The emotional side of investing is often more difficult than the financial side. When prices fall day after day, it becomes easy to believe they will never recover. Many investors sell near the bottom simply because they cannot handle the uncertainty. Later, they watch prices recover without them. That cycle has repeated itself in nearly every major commodity market. Silver has always moved in long cycles. There are years when almost nothing seems to happen. Then there are periods when prices move faster than anyone expected. Investors who only focus on the short term often miss these powerful long-term trends. One reason silver behaves differently from many other investments is because it has two identities. It is both an industrial metal and a precious metal. During periods of economic expansion, industrial demand can push prices higher. During periods of financial uncertainty, investors often buy silver as a store of value. That unique combination makes silver one of the most fascinating markets in the world. Right now, many investors remain focused only on recent price weakness. They forget that markets constantly move between fear and optimism. Every bear market eventually ends. Every bull market eventually ends. The difficult part is recognizing where we are in that cycle before everyone else does. If you bought silver near previous highs, you may feel disappointed. But remember that buying near the top does not automatically mean your investment has failed. Time often matters more than timing. Many successful long-term investors have experienced large temporary losses before eventually seeing significant gains. One important factor that continues to influence silver prices is the strength of the US dollar. When the dollar rises, precious metals often face pressure because they become more expensive for international buyers. When the dollar weakens, silver frequently benefits because global demand becomes stronger. Interest rates also play an enormous role. When the Federal Reserve raises rates higher, yielding assets become more attractive in the short term. That can reduce demand for precious metals, but markets constantly look ahead. Investors begin pricing future rate cuts long before they actually happen. Inflation remains another major piece of the puzzle. Even if inflation slows from previous highs, many investors continue searching for assets that can protect purchasing power over long periods. Precious metals have historically played that role during many different economic cycles. At the same time, government debt continues climbing across many major economies. Large debt levels often create long-term uncertainty about future monetary policy, currency, stability, and inflation expectations. Those concerns continue supporting interest in hard assets, including silver. Central banks have been buying enormous amounts of gold during recent years. While central banks do not usually accumulate silver in the same way, their aggressive gold purchases send an important message. They recognize the importance of tangible assets during uncertain times. That broader interest often creates positive sentiment across the entire precious metals sector. Another major reason investors remain optimistic about silver has nothing to do with monetary policy. It comes from technology. Modern industries require more silver than ever before. Electric vehicles, solar panels, advanced electronics, artificial intelligence, infrastructure, medical technology, and semiconductor manufacturing all depend on silver because of its exceptional electrical conductivity. Unlike gold, much of the silver used in industrial applications cannot always be economically recovered. Once silver enters certain manufacturing processes, a significant portion effectively disappears from available investment supply. that gradual reduction in available physical silver creates long-term supply challenges. Meanwhile, discovering new high-quality silver deposits has become increasingly difficult. Mining companies face rising production costs, environmental regulations, labor shortages, and permitting delays. Building new mines often requires many years before production even begins. These supply challenges become especially important if industrial demand continues expanding while investment demand also returns. That combination has historically produced some of the strongest silver bull markets ever recorded. Many experienced investors understand that successful investing rarely feels comfortable. The best opportunities often appear when confidence is low, news headlines become overwhelmingly negative, and public interest disappears. That is exactly when disciplined investors begin paying closer attention rather than walking away. Your current loss does not define your future return. Markets do not know the price you paid. They only reflect current supply and demand. The important question is not where you bought, but where silver could eventually go, based on changing economic conditions. Some investors choose to reduce their average cost over time through disciplined buying strategies. Others simply hold their existing positions while waiting for market conditions to improve. Every investor has different financial goals, different risk tolerance, and different time horizons. The biggest mistake many investors make is allowing short-term emotions to override long-term planning. Fear often becomes strongest near major market bottoms, while excitement usually peaks near major market tops. Understanding this psychological cycle can help investors make more rational decisions even during difficult markets. Many investors ask one simple question. If silver has so much long-term potential, then why has it spent so much time below previous highs? The answer is because markets move according to expectations, not emotions. During periods when investors believe economic growth will remain strong, money often flows into stocks, technology, and higher-risk assets. Precious metals temporarily lose attention even though their long-term fundamentals remain healthy. That situation can change very quickly. A single shift in Federal Reserve policy, unexpected inflation, surprise, geopolitical conflict, banking crisis, or recession concern can rapidly change investor behavior. We have seen this happen many times over the past several decades. Markets that looked weak for years suddenly entered explosive rallies within months. Jamie Dimon and other major financial leaders have repeatedly warned that global uncertainty remains elevated. Whether the concern involves government debt, slowing economic growth, trade tensions, geopolitical instability, or financial system risks, investors cannot ignore these possibilities. Precious metals often attract attention during exactly these environments. Another important factor is physical silver demand. Around the world, many individual investors continue purchasing silver coins and bars regardless of daily price fluctuations. They view physical silver as long-term financial insurance rather than a short-term trade. That steady demand creates an important foundation beneath the market. Large institutional investors also monitor silver closely. Many hedge funds, pension managers, commodity traders, and wealth management firms increase exposure when technical and fundamental conditions begin improving. These large flows of capital can accelerate price movements once momentum returns. Technical analysis also provides useful clues, although it should never be the only factor guiding investment decisions. Long periods of price consolidation often create strong future breakout opportunities. When resistance levels finally break, buying pressure can increase rapidly as more investors recognize changing trends. Many analysts continue watching the gold-to-silver ratio. This ratio compares how many ounces of silver are required to buy 1 ounce of gold. Historically extremely high, readings have often suggested silver was relatively undervalued compared with gold. While no indicator guarantees future performance, this ratio remains one of the most closely followed measurements in the precious metals market. Industrial demand continues creating another powerful tailwind. Governments worldwide continue investing billions of dollars into renewable energy infrastructure. Solar panel production alone requires enormous quantities of silver. As nations pursue cleaner energy goals, silver demand may continue rising for many years. Electric vehicles represent another growing source of consumption. Modern vehicles contain significantly more silver than traditional automobiles because advanced electrical systems require superior conductivity. As production expands, global silver demand could increase even further. Artificial intelligence data centers, advanced computing medical equipment, telecommunications, and semiconductor manufacturing all depend on high-performance electrical materials. Silver remains one of the most effective metals available for many of these applications. Supply, however, cannot instantly respond. Building new mines requires exploration, environmental approvals, financing construction, skilled workers, and years of development. Even if prices rise sharply, additional production often arrives much later, creating temporary supply shortages. This imbalance between growing demand and limited supply is exactly what many long-term silver investors continue watching. They understand that commodity markets eventually respond when shortages become difficult to ignore. If your investment currently shows a large loss, ask yourself one important question. Has the original reason for owning silver completely disappeared, or have market prices simply moved through another normal cycle? If the long-term reasons remain intact, temporary price declines may deserve patience rather than panic. That does not mean silver will move straight upward. Markets never behave that way. Corrections, volatility, and unexpected headlines will always appear. Successful investors prepare emotionally for these fluctuations before they happen. Diversification also remains extremely important. No single investment should determine your entire financial future. Silver can play an important role within a balanced portfolio, but every investor should consider their personal financial situation, investment objectives, and risk tolerance before making decisions. Long-term wealth is rarely built by chasing excitement. It is usually built through discipline, patience, consistency, and emotional control. Those qualities often separate successful investors from those who repeatedly buy high and sell low. History reminds us that nearly every major bull market begins while public confidence remains weak. The news rarely announces the exact day when trends change. Most recoveries begin quietly before eventually attracting widespread attention. Months later, headlines finally become optimistic after much of the move has already happened. If silver eventually enters another powerful bull market, many people currently ignoring the market may suddenly return. They will wonder why prices are climbing and wish they had paid closer attention during periods of uncertainty. That pattern has repeated itself across financial history again and again. Your investment journey should never be based solely on daily price movements. Instead, focus on understanding the larger economic picture. Follow inflation trends, Federal Reserve decisions, industrial demand, mining production, global supply chains, currency movements, and overall investor sentiment. Those factors together provide a much clearer understanding of where silver may be heading than any single headline ever could. If you still own silver despite experiencing significant losses, you have already demonstrated something many investors struggle to maintain: patience. The challenge now is making future decisions based on careful research rather than temporary emotions, because markets constantly reward discipline over panic. Continue to Part 3, where we will bring everything together, explain what could trigger the next major silver rally, discuss realistic expectations for the years ahead, and finish with the most important lesson every silver investor should remember. The biggest question now is not whether silver can rise again. The real question is, what could actually ignite the next major move? History suggests that silver rarely climbs for just one reason. Instead, several powerful forces usually come together at the same time, and that is exactly what many investors are watching today. The first catalyst could be a shift in Federal Reserve policy. If inflation continues cooling, while economic growth slows, the Federal Reserve could eventually begin lowering interest rates. Lower borrowing costs often weaken the U.S. dollar and improve the outlook for precious metals. Although no outcome is guaranteed, investors constantly watch every inflation report, employment number, and Federal Reserve statement for clues about future policy. The second catalyst is growing government debt. Around the world, national debt continues reaching record levels. Servicing that debt becomes more difficult as interest costs increase. Investors know governments eventually face difficult choices, including higher taxes, increased borrowing, or more accommodative monetary policies. All of those possibilities can strengthen demand for tangible assets over time. The third catalyst involves global uncertainty. Geopolitical tensions, trade disputes, banking concerns, and regional conflicts continue reminding investors that financial markets can change very quickly. During uncertain periods, many investors seek assets that have preserved value throughout history. Silver has repeatedly played that role alongside gold. Industrial demand may become the fourth catalyst and perhaps the most underestimated one. Every year, the world requires more advanced technology, more electric vehicles, more renewable energy, more artificial intelligence infrastructure, more semiconductor production, more medical equipment, more high-performance electronics. Every one of those industries depends on silver in some way. At the same time, mining companies cannot instantly increase production. Developing new mines takes many years. If demand grows faster than supply, basic economics suggests prices eventually adjust higher to balance the market. This does not mean silver will move in a straight line. Corrections will continue. Volatility will remain. Headlines will constantly create fear and excitement, but long-term investors understand that temporary volatility is often the price paid for potentially larger future opportunities. If your portfolio currently shows a 50% loss, remember that unrealized losses only become permanent when investors panic and abandon carefully researched long-term strategies. Every investment should be evaluated based on current fundamentals and future expectations, rather than past purchase prices. One lesson appears again and again throughout financial history. Markets reward patience far more often than they reward emotion. The investors who usually benefit the most are those who continue learning, remain disciplined, manage risk carefully, and avoid making decisions based solely on fear. Nobody can promise exactly when silver will reach its next major high. Nobody knows the precise month or year when momentum will return. Anyone claiming certainty is ignoring how financial markets actually work. But history does show that some of the greatest opportunities often appeared when confidence was at its lowest. Think back to previous market cycles. Stocks, real estate, commodities, and even gold have all experienced painful corrections before reaching entirely new highs. Investors who focused only on short-term losses often missed extraordinary recoveries. Silver has survived inflation, recessions, banking crises, currency devaluations, market crashes, and global conflicts for centuries. It continues serving both industry and investors in ways few other assets can match. That unique combination is exactly why so many analysts continue paying close attention to its future. If industrial demand keeps expanding, while investment demand returns and supply remains constrained, the long-term outlook could become increasingly favorable. That possibility explains why experienced investors continue monitoring silver despite temporary setbacks. Whether you decide to hold, buy more, or simply watch from the sidelines, the most important decision is making choices based on knowledge rather than fear. Understand the risks. Understand the opportunities. Stay informed about inflation, Federal Reserve policy, the U.S. dollar, industrial demand, mining supply, and global economic developments. Those factors will likely shape the next chapter of the silver market. The market will continue testing patience. It will continue creating doubt. It will continue shaking out weak hands before rewarding disciplined investors. That has happened throughout financial history, and there is little reason to believe human psychology has suddenly changed. If you own silver today, remember that your investment journey is not defined by one difficult year or one painful decline. It is defined by the decisions you make during challenging moments. Those moments often separate emotional reactions from long-term success. Thank you for spending your time with me today. If you found this analysis helpful, make sure you like this video, subscribe to Silver and Gold Watch, and turn on notifications so you never miss our latest updates on gold, silver, the Federal Reserve, inflation, and the global economy. I would also love to hear your opinion in the comments. Are you still holding silver despite recent losses, or do you believe the biggest move is still ahead? Your thoughts could help other viewers learn from different perspectives. Until next time, stay informed, stay patient, and keep watching the markets, because sometimes the biggest opportunities appear when almost nobody is paying attention.